Hello guys, and welcome back to another YouTube video. Today I'm going to be discussing how I deal with losses and how it is crucial to understand that losses are part of the Forex trading game. They will happen and they're just pretty much unavoidable for any type of trader. No matter how good you are, you will always experience losses. Some of them you can make some good lessons from, as I've touched on before in the past. If you haven't done already, please leave a like on this video and subscribe to be sure you don't miss any of my future videos. So essentially, since the middle of March last month, things changed slightly for me and my trading style. And since testing, I think we went on about a 6-win streak up until earlier. Oh no, I think it was this time last week. That was the first loss, and then a couple of days ago we had another loss. So 2 losses on the bounce now. So yeah, I thought I'd break this one down for you guys to see. There is a big lesson from this for me, and this is why losses can be important, because at this stage, you know, you can make good money on Forex, and I'm in a position where I'm making decent amount of money from each profitable trade, but that also means that you do lose a decent amount for any losses that you have in trading. But it's important to iron out these changes and take these lessons from the losses so early on in your journey, because I say early on, obviously I've been doing it full time for 3 years, you know, compared to people who do this full time, you know, they've been doing it for 10 years, 20 years and plus, you know, 3 years is still relatively low amount. And obviously this final tweak has only been live for just over a month now. So, you know, ironing these mistakes out whilst we have a smaller pot of capital is the best way to do it. So anyway, let's jump into the trade idea. So if we start with the daily time frame, we can see that price is bearish overall, and we've marked out our premium discount tool, and you can see we're interacting with this daily order block here formed from this bullish candle. And with price being bearish, though we aren't in a premium area, we can still anticipate that price could continue down from here a little bit further, because we don't know for sure that this is the confirmed low of this leg of price. So my idea was potentially to look for shorts once we see an interaction with this area. Now on the 4 hour, we have a similar story. We've had a recent break of structure to the downside after some consolidation earlier in the week, and price broke down, and then we saw a retracement into this 4 hour order block, which is also within our daily zone. So there was 2 decent confluences there. Price was bearish as well. The only thing is there was a decent amount of momentum here coming into the zone, so it's something to be wary of. But for me, I was happy to look for sells from here. Now the 1 hour is where we started to see a bit of a different picture. So the 1 hour chart had flipped bullish recently, as you can see, and this signaled that, you know, we were going to test higher time frame supply areas such as this 4 hour order block to really understand whether we will continue to the upside by breaking this area, or this area will hold, which I was anticipating it would at least provide a small reaction that we could get in low time frame sells from. So then the 15 minute, we can see 15 minute is bullish as well, the same as the hourly. But notice we've started to slow down here. So to me, this kind of indicated that potentially price is slowing down because we have reached the end of this first bullish rally, and we could see a retracement potentially back into this 15-minute order block. Now obviously we do have a large 15-minute fair value gap here as well, but high time frame for me always takes precedent, and it's always worked out for me to be the best thing to do. So I was still anticipating sells from this point. Now something that has been new is I've been trading on the New York time zone. Now the New York time zone closes at 10 a.m. New York time. After that, price can sort of slow down because, you know, there's no big institutions trading. So realistically, the cutoff point should still remain for me at 3:30, 4 o'clock. But I actually executed this trade later, and I will go through that now. So I dropped to the 5-minute time frame. This 15-minute boss was the same as a 5-minute break of structure for me. So they were marrying up at the time. And I reference 5-minute and 2-minute for entry because it allows me to get in and out relatively quickly. If we see price break this bearish candle here, to me that indicates a potential early and aggressive 5-minute change of character. Now the 5-minute change of character can often line up with a 2-minute break of structure, as you can see here. So we wait for these both to occur, and then I will look for an entry point, because we're coming off high time frame supply. Yes, the hourly is bullish, but to me every other time frame is still bearish on the higher time frames, and they always take precedent to me. So if we play price forward, you can see we get this full body change of character and also a 2-minute break of structure. So once we see that 2-minute break of structure, we use the premium discount tool. So from this premium discount tool, we look for a fair value gap around the 0.5 region or above. Now to me, this is an obvious fair value gap. It's around the premium region. And so at this point, I'm happy to look for a sell. So I would use the open of this area, stop loss above the previous high, and a target of 2R around here. If we play price forward, and as you can see, we get tagged in at 24 minutes past 11, or around there, probably 25 past New York time, which British summer time is 24 to 25 minutes past 4 in the evening. Now remember I said that the 4 o'clock should have been the cutoff point at the latest, but I didn't know this, and obviously this is part of the reason why losses are important. You know, we can avoid this loss going forward now, because we know, or rather I know, that liquidity just drops too much post 4 o'clock. So we are too far from the New York session to get involved in the markets, really, because if you've got people involved in the markets, such as larger institutions and stuff, they will push price in the direction that you want to see it in, or that you're anticipating. But without these big institutions in, price can just sort of aimlessly fluctuate and change direction. So if we play price forward a bit, we can see we do get an initial reaction, but not really much of one. The candles are very small, doji candles. And look at this. This is nice, decent momentum during the PM session of the New York. And as we enter the second half of the PM session in New York, look at the candle sizes. I mean, we drop off massively. Look at these candles here at around 4:30 British summertime. Really just small and not really doing much. We're very corrective compared to this impulse. Now normally an impulse and a correction, we look to see the impulse in the next phase of price, which is fine to do again when you're in the New York trading session, but when we're outside we just don't have that same volume. So going forward I won't be executing trades post 4 p.m. Play price forward, we do start to see a reaction. We have hit about 0.67% profit at this point, but then we're still consolidating overall, and price just doesn't have the momentum required to keep pushing down. Price nearly hits stop loss, and about midway through the Asian session ends up taking us out for a loss. So I'll show on screen what the loss was. Again, as you can see, that figure is, you know, to some people a decent amount. To me that is still a decent amount to lose. But when you think you have a higher win rate and your risk to reward is twice what you risk, it doesn't matter so much, because I've just come off a back of a 5-6 winning streak. You need to remember that you have a risk management in place, and to be able to deal with losses, you need two things. Firstly, you need to ensure that when you're risking capital, that you're investing the capital, putting it on the table to make more than you risk. All of my trades are around 1 to 2 risk to reward, which means for every trade I enter and I risk a percentage, say I risk £100, I aim to make £200 from the risk of that £100. So my strike rate out of the last 10 trades is 70%, probably, maybe slightly less at the moment. But let's say the trades that I've taken since this new strategy has come in place, I would say it's around 60 to 70%, and it will get higher because a few of those trades that I've lost have had lessons to them, which I've now implemented, and again we have another lesson here. So going forward, I'm aiming for around a 70% strike rate. This means that 7 out of 10 trades should be winners, right? So if you place £100 across the 10 trades with a 1 to 2 risk to reward, the 7 winners you get generates £1,400, and your 3 losses means that you lose £300, so you're still up £1,100. And from percentage perspective, if that £100 was 1% risk, that means you still end on 11%. So that's one of the major things. You always want to risk capital and aim to make more back than you're going to risk. That leads me on to the second big factor in risk management. When you start a month out, typically as a beginner trader or even intermediate traders, if you plan on trading the same strategy, which you always should during any given month, you also want to risk the same capital per trade that you execute in a given month, or an even larger given time frame. And the reason is because if you start seeing a nice little win streak and you think, oh, this is going well, I'll double my risk now, then your loss streak starts, you're eating into your profits twice as quick as you should be. And this can affect your mentality, it can affect your psychology, and the losses mean a lot more to you because they're double what you would have risked earlier. And now suddenly that 1 to 2 risk to reward has actually just been a 1 to 1, which in effect means a 50-50 gamble. So it's also important to stick with the same risk every month as a minimum and review it at the end of the month. If you've had 2 consecutive good months, maybe you want to up your risk, but you've got to accept that you need to stick with that risk throughout the month. If you start the next month with high risk and you start off on a 2-loss, 3-loss streak and you start going into a bit of a drawdown, you can't then reduce your risk because it will take that bit longer to get your capital back. So risk management is very, very important in this game. It's not just taking the lessons from losses, but it's also ensuring that you're not too greedy. I mean, you will hear all the time about fear and greed, the drivers of the market. This is what you've got to be able to overcome. And it's something so simple in theory, but you would not believe the amount of people that get greedy or that start losing their heads because they're on a bit of a loss streak. If you prepare by setting the same risk and sticking with it, then that's how you can become a much more successful trader. And when you experience losses, they don't faze you as much. So this pretty much wraps up the video. I hope you enjoyed and took some value from it. As I say, I've got a free Telegram chat that's available to join via the link in the description. And I'm also developing a course at the moment, which we'll touch on more. I'm hoping it will be complete within the next month. However, I will have certain sections of it complete by the end of this week, ready to go next week, and I will be handing out for free. So if you wish to access this free first section to see if trading is for you and perhaps to take some value away, be sure to join the chat. Thanks for watching, and I'll catch you in the next video.